Hey guys, Chris from Beyond Backtesting today. Finished my trading, taking a lunch break here, and hope you had a good week trading. If not, there's always next week. And had a good day today, so that's good. I can talk confidently. But I want to talk about, does it take a lot of money to trade futures, or how much does it take? And when I talk about a topic, I'm not just talking about a topic just to talk about. I'm always trying to provide some value for myself and for you. And in this short blog post, I really want to focus it around the trader who believes they can make consistent money, and they want to make $250 to $500 a day. That's kind of what we all want to make, right? Well, many of us we've been very happy with that. And the first I would answer this is yes, if you make mistakes. Yes, you make mistakes. Mistakes are very costly, and most of you will make mistakes. So without sufficient capital, you'll burn out your capital making mistakes. Okay, it's very So you gotta try to minimize that to the greatest extent possible. I lost $2,000 just testing orders on a platform. Okay, I'm not even trading. I was just trying to test the orders out, the automated capability on the macros, right? So you can lose money very quickly. And if you make many mistakes, and mistakes can come in different forms. I've lost money so many different ways trading futures. I traded a small account before the macros came out, and I didn't have enough margin. I put my trade on. I didn't have enough margin for my stop and my target. Okay, so all of a sudden the market went going another way, and I put I'd practiced this trade. This is many years ago. I'd practiced trading, and I was confident because I had my stop in, put my stop in, my target in right when I put the order in. All of a sudden, the stop don't go in. There's no margin in the account. Oh, dear, now what? Now I can even have my target or my stop, And so mistakes come in so many different forms, okay? Mistakes come in so many different forms that most of us will make some mistakes. It's just how much we can minimize that, right? So a lot of that is mistakes. Now, the second thing, okay, let's talk about this trader who wants to make money. Now the second thing I want to talk about, and the second thing I want to talk about is the macros. The macros are a true game changer. They are a true game changer in so many ways. And yes, it is. If you trade them too frequently, it's hard to. I've seen it's harder to make money on them than the minis. But if you approach them with the same discipline and the same, looking for good quality trades, I'm putting up good numbers in the macros. And trade fees are a little higher, sure, but that's just it's not if you're putting up good trades, your trade fees are not a deal breaker. Okay, let that be clear. If you're a discount broker like AMP Trading, even trading the macros, you can. Well, I don't want to say what you can do, but I'm saying that so you can look at some of my days and see that hey, I was profitable trading macros on some days. So I'm not making any statement on profitability or what you can do or what you can't do. Let me start with just a disclaimer. Futures trading is risky. This is all hypothetical because they're all hypothetical, no non-financial advice, right? But the macros are a game changer. The CME macros are a game changer. And so often we look for things, when things are not going our way, we look for something else. Like, for example, for the longest time, I didn't have enough money to trade the day trade stocks. So as soon as I had the money to trade stocks, I'm like, okay, maybe this is where I should be at. And and with the macros, I don't need to be in stocks, right? I only look for position trades or things. I don't need to be in stocks. So the CME macros are a game changer. When I started trading, I had to put on $600 risk per trade. And if you're trading a $5,000 account, $600, $700 per trade a lot of times for a system trade, or even $1,200, you're trading a $6,000 account, $7,000 account. It's a big deal. Okay, it's a real big deal to go live. It's really stressful. The macros, okay, you can make a trade for $20. Okay, $50. It's really now you still have to treat with respect because you can lose a lot of money trading macros too if you don't give them the proper respect. Okay, but it's just that you don't need a lot of capital with the macros now, and the macros are a real game changer because it allows you to take a small account and scale it up. Now, so with the macros, this is a big game changer. This is really is really important for us traders who don't have big accounts. It's a real, yes, I'm trying to pass the trials so I can show that I passed them. But You don't need to. You can trade in macros. If you can do what the trials that these the trial companies, you can certainly build an account, grow account for the macros, a small account. So now, so that's two things to think about. Okay, mistakes are costly. Macros allow you to trade smaller, and with I'm not going to give it an exact amount out, but I would say with a $2,000 or $3,000 account, you could trade macros, even less. However, this depends on how we'll address the second part of it, right? And again, in the past, I said, okay, I need $1,000 to trade futures because of the size, right? So I have to have $1,000 daily loss limit, and this is where where things change, right? And where you have to get your head clear, so to speak. And I had to get my head clear. I was like, okay, I know I have to have $1,000. Those ideas came back when I could only trade the minis, right? And they weren't true anyway. Okay, they weren't true anyway. So what we'll talk about is, and then today I'm like, okay, I could probably do it $600 loss limit. The reality is I could do it with much less, because here's the deal. If you want to be this trader making this, doing this, how much do you think you can be losing? Okay, how much do you think you can be losing? Not very much. You can't be doing this. You're not going to be a trader. You see, this is the problem. Is there's a vast disconnect in the performance needed to achieve this and what most people can achieve. Okay, there is a vast disconnect. Okay, there's such a vast disconnect that it's hard to. I'm gonna try to explain the disconnect. And Mark Melnick, and I know he's running into some legal problems, and hopefully he can come back from that and be a good trader and all. I don't know him in any way, shape, form. I just seen some of his videos, and he used to talk about and I know he's had legal problems. I know all that, and I don't want to get into that here nor there because I wasn't a member of his room. I just watched his for YouTube videos. He talks about the 60-40 paradigm and getting out of that paradigm. Okay, and 90% of the traders are in this paradigm, the 60-40 paradigm, right? Which means you win 600, you win 50, you win around 55% of the time. Okay, 55, 60% of the time. I think that's how you described it. But this is the idea that I got. And if you're not trading, we're talking about hybrid traders. This is the approach I take on. Is this that we're talking about? We're not talking about systems that have demonstrated edge and all. But if you're one of these traders and you're not trading a system with demonstrated edge that goes back 10 years, right? You're doing something in your trading, and this is where you're at. There's a good chance you're gonna blow out, or you're gonna need a big account, right? Most traders are in this 60-40. They're in the 60-40 paradigm world, and so they can't do this. You can't do this, okay? If that's where you are, and the problem is that I don't want to say what's good or bad with trading, okay? I want to see what type of performance is good or bad, right? But, when you hear, okay, a good trader makes 50% a year, maybe, or 100%, okay, well, this is not 100%. If you're doing this, if you're making if you're averaging $300 a day, right, you're not in that paradigm. And so, when I started trading futures, I was doing that 50%, 100% type returns on accounts, double them. Sometimes they come back to break even or whatever. But, and so I needed a bigger account. I mean, quote unquote, right? But you're never going to get to this doing that, right? That's a different level of performance. And this vast disconnect is what we're talking about, this 60-40 paradigm. If you want to be in this guy, if you want to be making $250 to $500 per day, okay, you want to be in the 75% win ratio to 85% win rate, to 70% to 85% win ratio traders, okay? A competent scalper, and I talk about scalping because whatever type of trading you can do that's that consistent, right? And scalping is the most difficult form of trading, okay? I think it's the most difficult. But we're talking about active trading. If you're talking about what type of trading you're doing, and I know profit factor comes into play. I know that there's, if you have a great risk to reward, your profit factor, you may not need as much win ratio. But this is a good measure of trade quality, and it's even better in profit factor because it really tells us how much we can scale our account under normal assumptions. Profit factor, if you win very low, a very small amount, you can still blow your account out because you don't know when that next big win's going to come. But I'm not here to saying that one's better than the other. I'm just saying this is the metric I'm going to use, right? And we're not going to talk. With profit factors, I could get into that too. and they are important. But I'm gonna keep it simple. Okay, 70%, 85% win ratio to be in this level to do this. Okay, if you think about it, and when I think about it myself, if you're going to make $250, let's just say you say, okay, I'm going to make $300 a day trading, right? If you're down $1,500, think about this. If you're down $1,500, okay, so I need a $25,000 account because I might be down $12,000. How are you going to make $300 a day? Okay, if you're actively trading, and we're not talking about position trading. Obviously, if you're holding positions, you need more money. Obviously, but most of the people want to do this. You're not wanting to hold positions. You're day trading. You're not holding positions, right? If you're down $1,500 and you're hitting your $300 target, right? You've got to trade for 5 days just to get back to break even. Okay. So what we're seeing here is that, hey, if you're going to be making money every day, you can't be down very much, or else you're not making money. So this is kind of the lesson that I learned that has taught me this, right? If you're going to be a trader who's making $300, $400, $500 a day, yeah, you might be down 2, 3, 4 days, right? Maybe it should be a rare event, or because if you're, let's say you say I'm going to be a trader who makes $3,000. Okay, we'll say 300 times 20 equals $6,000 a month. Okay, if you're down $6,000 on the month, you've got to make $12,000. First, you got to make $6,000 just to get back to be even on the month. Then you got to make $12,000. You have a $12,000 month to pull up that $6,000. So when I first started trading futures, so here's the thing. Okay, when I first started trading futures, we didn't have the micros, so you needed a bigger account. You needed to be able to take bigger trades, and I didn't understand the 60-40 paradigm. I didn't understand what it really takes if you want to do this. Okay, this is an elite level of trading. Okay, this is an elite level of trading. If you want to get to this 250, this is what I've seen. This is my opinion. It's not based on, this is my opinion. I'm just sharing different things here. But if you want to get to this $250 to $500 a day, with your discretionary trade, we're not talking about systems, we're running portfolios. We're talking about the hybrid trader who's trying to put on, and do this in a way that can be managed, without tons of systems, right? System trading is different, and you could be in that 60-40 paradigm because you have such a demonstrated and proven edge. And I will say, most of your edges. Here's the problem. Here's the deal. Okay, so you want to be this $250 to $500. You want to be this trader who's doing this on a consistent basis. Your competency win ratio is 70%. Like, that's competency. Okay, 85% is good. Okay, and below 70% is struggling really. Okay. Maybe 55% is okay, if you have the, we'll say it's struggling. 70% you have competency, and 85% you're good. Okay, 85% or better. Okay, and 70% or better. 87% or better. If you're below, 55% is minimal. We'll call it minimal competency. Okay. Here's your win ratios. Now, here's the problem. Most methods, of course, are not profitable, but even among methods that you find that are profitable, they're 55% win ratios. Okay, that's what you find with systematic trading. You do the back test, you find if you find a very nice edge, it might be 55% win ratio. Now, I've talked about boosting methods and things that can boost that up, and I can get higher win ratios from systems, but the cost of that is you don't generate as many trades. So you're going to have a portfolio of systems, and you have to build out a large operation, right? So we're talking about somebody checking just a couple trades, just trading what they can do, what one trader can manage, right? So this is your minimal competency. This is not where you want to be. This is borderline failing, 55%. 70% or better is your competency level. 85% or better is good. The problem is, how are you going to do this, right? But when we think about most people in the 60-40 paradigm, you have to get yourself in this 70-85 paradigm to do this. So it's not about having a lot of money. It's about how consistent you can trade, because if you truly trade consistently, right, then you can't be having these big swings. You're not a big, and a lot of traders like to say, "Oh, I'm a big swing." I did that. I don't want to be this trader who swings and up and down and say I can come back. That's not who I want to be as a trader, right? We have to think about. I got another topic: what we want and what we don't want our trading down here, right? But for me, that's not what I want, right? Does it take a lot of money to trade futures? I'm going to say if for most of you will because you'll make mistakes, okay? And because of that, you have to have money to recover from those mistakes. The less mistakes you make, the less money it takes. If you use the micros, it takes less money because they're smaller. You got freedom, and we'll talk about if you want to build a trade at this consistent level, you're not going to need a lot of money. You're not going to need as much money. If this is where you want to trade at, right? Doing this daily with consistency, then it's not going to take as much money because it necessarily, you can't be doing both. You can't be making money every day and also be having these huge drawdowns. Okay, if it's coming from active trading and you're not taking on positions, that's not going to happen, right? If you hold positions, yes, you could take big swings, and that's a different sort of trading. We're talking about active trading, right? And I used to always think, okay, I need a $1,000 daily loss limit, and I've grown to say, okay, 600 is enough for me. 600, I don't need more than 600, right? And I'm going to raise that if I need to, but 600, I'm fine with 600. And really, when you start getting consistent, I could drop that to 300. Okay, I could drop it to 300, 400. Because what do you need? Your daily loss limit. Okay, your daily loss limit only needs to allow for one trade. What you need in one trade, at least one trade, and maybe up and max 3 trades. Okay, that's all you need, because if you're going to be consistent, you're not going to lose that trade. Okay, so maybe lose your first trade, maybe you have 2 trades, but you don't need more than 3 trades. So if you say, okay, I'm going to risk 150 per trade times 3, or 200 times 3. Okay, that gives you 600. That's plenty. Okay, that's more enough because that assumes you lose all 3 trades. Okay, and so you don't need you don't need a crazy big daily loss limit unless you're trying to put up bigger numbers. You should be able to put up. Again, you should be able to. My goal, I'm not saying what you should be able to do, right? But my goal is to be able to put up 50% to 100% of my daily loss limit per day. Okay. So so my target's $300 to $600 per day. Okay, they lost my $600. But I think what's important is understanding that that loss limit is it should be something we're hitting often if we're able to do this, and it shouldn't be something like you feel like, I need that $600 because you should be divided up at least 2 or 3 trades, and so I would say the minimal. You want to talk about the minimum loss limit for a consistent trader is slightly more than 1 trade, right? It's slightly more than your average trade. So let's say you got $300 risk. Let's say if you want to put on $250 risk on a trade, then you may need $100 extra, so $350. Okay, because you shouldn't have 2 full losses in a row. If you're getting that elite level, and that's we're talking about elite level trading here, right? But that's what you need, because if you're that consistent of a trader, okay, most of us are not able to do that because we're not 60-40 paradigm. If you're not 60-40 paradigm, this is going to be very difficult to reach. Okay. So this is the reality, right? This is the way I see it. It's the reality. Now, so if you can hit that consistency to do this, then you don't need a very big account. And that's one thing I didn't. Now again, right? But if you make mistakes, if you do make mistakes of real money, you probably need a very big account because it's very easy to lose a lot of money quickly. But once you have everything dialed in, if you're able to start achieving this, then you don't necessarily need a very large account. Now I recommend I've recommended different amounts over time because I'm not talking to this trader. I'm talking to traders who are not they're not going to be able to achieve this. Okay, but if you want to achieve this, right, then you don't take a lot of money. Okay, I would say maybe I would say 4 to 5 losing days in a row. So of your loss limit, so $3,000. Okay, would be what. But that's assuming these assumptions are correct. Now I want to talk about how you lose money real quick too. I don't want to go too much over 20 minutes. How you lose money? How to avoid losing money trading futures, especially if you're trying to do something like this. Okay, and this is not exhaustive, but one is, I would say, be very mindful of correlated losses. Okay, so the nice thing about having the loss limit, when you place, and this is something I've seen, all the big account blowups I've had, all the big losses, almost all of them have came from the correlated losses, and it happens very fast. Okay, that's one thing. It can happen very fast, and your loss blows up very big. So the first thing is you have to start really embracing that daily loss limit, and saying, "Hey, I don't need." That's your freedom to trade within, and that's how I'm viewing it now. That's your freedom. If you need more, if you don't need to change the daily loss limit for the micros. You could say before, "Oh, I just need a bigger loss limit. I could trade." No, you don't, because you can trade the micros. You could trade for half the loss limit and size down half of the loss on the micros. So first thing, okay, you have to be very mindful of correlated losses, because if you trade, let's say you give a trade 4 points, let's say a 4-point trade, right? 4 points on one ES contract is $250. Okay, now that's a that's a pretty tight stop. 3 points is 150. 2 points is we'll say 4 points. That's 50 times 4, $200, right? Okay, $200. Now here's the thing: a 10-point stop equals $500. In the current market, 10-point stop can get tagged. Obviously, we got these big ranges, but when the volatility is not as high, a 10-point stop is not as likely to get tagged. But here's the deal: if you take that 4-point stop and you get it tagged 3 times, you're not $600. The horizontal movement, you've multiplied the horizontal loss very quickly, more than this. Okay, so in other words, the market can move less than 10 points, and you have a loss bigger than 10 points. This is the key thing to have a big loss in futures. Okay, when we're trying to do what we're trying to do, is correlated losses. Okay, they've led to every account I've ever blown out. Every big loss has came from correlated losses. Okay, almost all of them, unless you just get a real big size and you hold it. There's 2 sources of losses, and there's more than 2 sources, but two primary sources. One is correlated losses and holding over huge, over range, right? Because the market has to move over range. So, holding a loss for extended period of time, just not being willing to cut it. But if you don't do this, should be fairly obvious to say, hey, you're down, you're losing, you're moving more and more. This takes time. Importantly, usually the market takes time to do this. This can happen. The market don't have to even move. If you put on a big trade, gets to stop loss, you put it right back on, right, comes back up. The market don't have to move. This can happen, and I've seen this happen. Okay, so this is the big thing when you're trying to hit that, the $300 to $500 through multiple trading. This is what has to be avoided. This is the most important thing. Okay, you get out of this video. Now, how do we avoid this? One way we avoid this, right? How do we avoid this? How do we avoid this? I'm gonna give you some suggestions. One, your daily loss limit, right? Here's a nice thing about your daily loss limit. If you tighten that loss limit up, okay, then even when you hit those correlated losses, you stop, it's done. Okay, so that's going to be one layer. That's one layer of defense. 2 is you want to have a systematic / algorithmic entry system. Okay, you can combine that with your market read, tape read, but you want to be this will help. You want to have a good quality entry when you enter it. Okay, 3. I'm just looking at the market here. It's really ripping, starting to rip higher now. After we come out of that zone. Okay, 3. How do we avoid this? Okay, daily loss limit, layer 1 defense, systematic interest system, correlated losses. A third suggestion would be take time between losses. Right? minimum time. So you have a loss, you sit on the sidelines, so you don't keep generating the same signal. Okay. A fourth suggestion would be you take the opposite side. You can only trade opposite side now. Okay. A fifth suggestion would be max reentry twice. 6, never reenter bigger size. So usually when I've had big losses, quarterly losses, it's a combination of adding extra size, re-entering, and you add extra size, re-enter, and then it makes it even bigger. So you either do all these can help. Max re-entry one time. That's what I'm trying to say. One time. So you have one re-entry. Never more than one. Never twice. Okay, never, because that's the re-entry, the first entry, and then your second entry. So you got the max. We'll say this: max 2 entries per idea, right? If you haven't, and then so that's going to help prevent this. So all these things together can help prevent this, and understanding that you shouldn't be having. You don't need a big loss limit to trade if you're going to be doing what we're trying to do. The real difficulty of doing this with consistency is that you probably be scalping. And here's the thing: scalping can be consistent, but can it be robust? That's a topic for another day, right? You can definitely get consistent at it, but can you do it robustly? And obviously, the bigger stop loss, the more robust your trade is going to be. However, then you lose that. You're going to probably lose the ability to scale up the trades and all, and trade and do this in such a consistent way. So the danger, the risk is when you're placing multiple trades, you're scalping, is you have a bunch of losers. If you have, if you're just placing one trade per day, or holding over, obviously the other thing is holding as it goes, holding over extended range as it runs against you. But here's the deal: if you're just giving yourself one trade a day, right? It could be a big trade even. You're not going to have those correlated losses on the day. So this correlated loss thing is, one of the major ways of you can lose money, right? Hold over extended range, it runs against you. This is one thing I always like to say, is that it's better always be active. Always be active. And because the only way this happens is if you just freeze. You better to take a decision than not to take a decision, because it's the one thing that's dangerous about this is you don't have to do anything. If you get in a big position, it runs against you. You can run against you. That's another thing. So number 3, I must always have your stop in. Always have your stop in when you place your trade, right? Have clear values. Have both. You can't be disciplined unless you believe in your rules. You have to believe in your rules, and they have to reflect your values. Okay. If I just tell you, hey, use a $600 daily loss limit, and you don't believe in it, you say, I need a $1,000 daily loss limit. There's nothing that's going to keep you within that loss limit, as long as you believe that you need that $1,000 daily loss limit to be successful. I'm telling you probably don't with the micros, right? If you're trading futures, you don't need that $1,000 daily loss limit. Okay, and I could drop below 600, right? If you're going to be a trader, as this consistent trader who's making $300 to $500 a day, your first trade should be a winner or a small loss. Okay, and you hit 2 or 3 wins, you're done. Okay, and that's that. So this is how I think about myself as well. So if you want to be a trader that's swinging, and it's that's a 50% for your trader up or down, okay, maybe you need a bigger loss. But so this is the reality of it. Okay, if you're going to be a trader sitting at consistency, you don't need a large account. You don't need a huge account, so to speak, right? Obviously, there's still no guarantees, but we're talking about what you need on average, right? And obviously make mistakes, right? And 2 out of 5, I say just be very careful testing stuff in the live. Be careful testing in the live. I do a lot of live testing, and I do it small, okay? But I've learned to be more mindful of that, okay? 6, don't play the macros, okay? I was playing the macros. I've lost big money playing the macros. You go on the macros, you treat them serious. And since I started doing that, I'm starting to make money. You don't go there and play average down, play games, especially the ranges we're seeing today, unless you have a huge account. Even with the macros, you get to these big numbers, and I've done that. Okay, I'm going there and play around, and I'll do a little market making. Let other people do market making. You want to be this consistent trader. Market makers don't make that much, okay? So don't be market making. That's the thing, right? Don't be doing that. Yeah. So yeah, I mean, so right. If you're going to get out of that 60-40 paradigm and you go up and you're going to be a trader who's going to be consistent, you don't need a lot of money. Provided you don't make mistakes and that you can trade at an elite level, right? And so that was the problem before, is you had to be this trader who go there and not make any mistakes with a small account. With the micros, though, the nice thing is you can start small and grow them. So the micros really are a great asset, because there's really no reason that you can't go in there, set your $5 per point. So you're risking $20 a trade. Okay, you take 3 trades, $60. Okay, so you can really go in there, whatever size you need to do, and learn it in the live, right? So that's the nice thing about the micros. It's really a game changer, and it's really great. I mean, it's really great because you can work on your craft, and we can work on our craft without having to risk, thousands of dollars. So I highly encourage you to take advantage of these micros, but don't play with them. That's the thing. If you're going to trade them, you got to treat them seriously, just like the real minis. Don't go in there averaging down, trying to market make, trying to, all this stupid stuff. You've got to control your volume, hit the good trades, and you can use the micros to scale up. If what I'm seeing, I'm being profitable with the right discount broker, like an AMP, right? So I guess the last thing is I'll talk briefly about, how do you get to that 70, we'll save this for another time. But basically, when we talk about what we want versus don't want in our trading, we're going to talk about how you get to that 70, 85% win ratio, which I'm going to say is hybrid trading. You got to combine algorithmic with your market read, not doing highly discretionary stuff to hit that. And so that's all for now. Hope you enjoyed it.